The live price for Crowdstrike stock, CRWD, as of this moment, Wednesday, November 12, 2025, is trading at $556.73 per share, reflecting a slight move downward in the intraday session. Specifically, the stock is down $0.80 or 0.14% from its previous close, oscillating within a tight day's range of $551.21 to $558.50. This stability, right up near the stock's 52-week high of $558.98, achieved just a couple of days ago on November 10th, presents a compelling expectation versus reality challenge. The common narrative is one of a high-flying, premium-valued cybersecurity giant that has bounced back masterfully from the mid-2024 service outage scare, riding the relentless wave of increased corporate IT spending and a booming demand for cloud-native security. The Apple stock and Tesla stock high-growth narratives have helped to set the tone for what the market expects from these tech leaders, and Crowdstrike certainly fits that mold. Investors generally believe this momentum is tied to the fear factor of cyber threats and the company's clear market leadership in the endpoint detection and response (EDR) space. However, the reality that undercuts this simple narrative is found not just in the recent insider selling activity, where the CEO, CFO, and other key executives have collectively sold millions in shares, including a notable set of transactions in early November, but also in the subtle shift in the company's growth drivers. Insider sales, even when pre-scheduled, always cast a momentary shadow, and in this case, it occurred right after the stock touched an all-time high, creating a tension point. Are the leaders realizing value at the top, or is this just standard liquidity planning? The true unexpected insight is that the massive surge in the stock, up over 60% in the last year, is increasingly less about beating new competitors in EDR and more about the company's aggressive and surprisingly effective platform consolidation strategy, particularly with its Falcon Flex model. This is the subtle pivot that the market is struggling to fully quantify. People expect EDR growth. They are getting platform expansion that is fundamentally changing the company's total addressable market by bundling products like next-gen SIEM, identity protection, and data security. This is where the deeper analysis must focus, challenging the surface-level perception that CRWD is simply an EDR company. It's becoming a full-stack security provider, and that's a different beast entirely. The market has been quick to push Crowdstrike to this near-record level, a move that gained significant traction following the company's strong fiscal third quarter 2025 results released back in September. The numbers themselves, exceeding consensus estimates for both revenue and non-GAAP earnings per share, were excellent. Subscription revenue growth, the core of the Crowdstrike stock business model, remained robust, and the annual recurring revenue, ARR, surpassed the $4 billion milestone, making it the fastest pure-play cybersecurity company to do so. This kind of financial execution is what keeps institutional investment firms interested and validates the premium valuation. However, the expectation of perfect execution was briefly challenged by a cautious revenue forecast for the subsequent quarter, which led to a minor pullback initially. The recovery since then has been swift and persistent, driven by the narrative that the company's platform is simply superior and necessary in the current threat landscape. This sentiment is evidenced by high module adoption rates among its customers, which are critical metrics for a platform business. The common ground is that Crowdstrike is successful. The deeper take is that this success is moving beyond defense and into a far more aggressive strategy of client wallet share capture through mandatory consolidation. For those of you who use online investing platforms, or if you're managing your portfolio with Schwab Intelligent Portfolios or an individual brokerage like Fidelity or Interactive Brokers, I want you to comment below and tell me which of CrowdStrike's platform modules, EDR, identity, or cloud security, do you think will drive the most net new ARR in the next 12 months? Your answers help us gauge market consensus on the most critical growth vector. Looking closer at the recent stock movement, the current price is a testament to strong sector momentum within the software infrastructure space, particularly for players who can credibly link their product to the AI narrative, something NVIDIA stock has completely dominated this year. CrowdStrike is effectively tying its Charlotte AI engine to its security offerings, positioning itself as a leader in AI native security, which gives it a significant advantage in the mind of a growth investor. The partnership announced with CoreWeave, an AI cloud provider, in early November is a perfect example of this. It's a strategic move that places Falcon Security directly into the production environments where large AI models are being built and deployed at scale, securing the very pipelines of the AI build-out. This is not just a marketing story. It is a fundamental expansion of where CrowdStrike's sensor sits, moving it from just the end user's device or server to the heart of the modern computing infrastructure. This type of strategic alliance and integration news is what allows the stock to shake off transient concerns like insider sales and maintain its upward trajectory. The trading volume has remained healthy, suggesting that large institutional players are still accumulating on minor dips, demonstrating conviction in the long-term story, even though the stock is near its 52-week high. This institutional support, with over 75% ownership by institutions, is a key factor in its reduced day-to-day volatility compared to some other high-beta tech names. The core of what CrowdStrike does is provide cloud-delivered protection for endpoints, cloud workloads, identity, and data via its Falcon Platform, which operates on a software-as-a-service (SaaS) subscription model. The Falcon Platform uses a single, lightweight agent across all endpoints, which feeds data into a unified cloud-native architecture. This architecture is crucial because it allows for rapid deployment, scalability, and most importantly, the application of complex behavioral AI and threat intelligence across a massive dataset to stop threats that traditional signature-based antivirus solutions often miss. The financial engine of the company is its subscription-based annual recurring revenue, ARR, characterized by high gross margins, which have consistently remained around 80% for the subscription segment. This high margin, coupled with excellent free cash flow generation, the company delivered a 24% free cash flow margin in its last reported quarter, gives it the financial flexibility to aggressively invest in new modules and M&A. This financial profile is the bedrock that allows the market to tolerate a very high valuation multiple. Older reports show a sustained history of high dollar-based net retention rates, meaning customers don't just stick with CrowdStrike, high gross retention, but they buy more of its products over time, module adoption. This land and expand strategy, now supercharged by the Falcon Flex model, is the sustainable growth driver, not just the overall market expansion. The move towards consolidation is essentially a direct challenge to multi-vendor security architectures, which is often complex and inefficient. CrowdStrike is telling CFOs they can save money and be more secure with a single, unified platform, making it an easier sell to budget-conscious enterprises. This strategy is perfectly suited for customers who want to invest online through an intelligent portfolio that prioritizes high-quality, high-margin, sticky SaaS models. Shifting focus to the future, the primary catalyst for CrowdStrike stock is the continuing narrative of platform breadth, specifically its expansion into next-gen SIEM and identity protection. The traditional SIEM, Security information and event management market is massive and ripe for disruption, and CrowdStrike's claim of an AI-native solution built on the same data fabric as its EDR is a significant competitive threat to established players. The ability to cross-sell these new modules to their existing base of over 20,000 customers is a near-term lever for ARR growth that often gets undervalued in simple growth models. The upcoming Q4 fiscal 2026 earnings report in early December is the next major flashpoint. The expectation is that the company will once again beat on the non-GAAP EPS front, but the real reality check will be in the net new ARR figure. Will the platform consolidation strategy show accelerating results, or will the general macroeconomic pressures on corporate IT budgets start to weigh on the all-important annual recurring revenue growth rate? If net new ARR accelerates, the current premium valuation is justified. If it shows a material deceleration,